We have an opportunity of having another edition of Frontier Happening Bell this morning. I'm Temple Ashaju. Thank you for joining us. We've got Bosun Amofaye, Executive Editor at Frontier Africa Reports, joining us on the show. Onyeka Ijama from Vetiver Capital Management. Thank you for your presence. And of course, Ayodeji Ebo from Chapel Hill Benham Advisory Bank. Appreciate you all coming through on the show this morning. Thank you so much. Let's kick in with the markets and look at the way they settled yesterday. We've got the Nigerian Stock Exchange down marginally by 0.05%. PRVM Stock Exchange was down 0.90%. Egypt Stock Exchange saw a decline of 63 basis points, and Nairobi Stock Exchange was positive 0.96%, while the Johannesburg Stock Exchange went lower by some 90 basis points. And now for the Eastern African headlines. Kenya Airways, we understand it sees a 58.8% decline, and of course losses tripled to 36.57 billion Kenyan shillings. Absa Kenya's got a net interest that was up 16%, and of course profit after tax went lower by some 3%. We got an impairment as well, positive 113% actually. The Capital Market Authority in Kenya has got saying that the licensing of brokers is in line with the coffee exchange regulations. And in Uganda, commercial banks there are seeking the central bank's bailout, while Rwanda reopens its 20-year fixed treasury bonds due 2040. We understand that bids will be opened by way of buildings today, while settlement is on Friday. Benchmark bond listing will be on the Rwandan Stock Exchange as trading takes with effect from March the 30th. That's on the secondary market. Bosun, help us to give us your editorial judgment of these headlines from the eastern parts of Africa.
A few comments. Quite a whole lot of news are coming in fast and furious out of Kenya, even overnight. Absa story came overnight. It spooked everybody in terms of impairments. 113%. That's just as worse as it could get, and that is something that goes across some of the banks already reporting their period in the Kenyan space. The issue with Kenya Airways is they're trying to manage it. It's similar to that of South African Airways, which is already said is solvent, but when will it get back to the skies? No one is sure because of the whole pandemic and all of that around the world. So Kenya Airways recently started refixing its aircrafts to become cargo based rather than passenger based. So how that will go on is a whole lot of government is partly owned. It's listed on the stock exchange in Nairobi, and I think in Uganda and Tanzania as well. How investors are reacting is anyone's guess with this kind of numbers that the company just supported. I'm sure Uganda banks, Nigerian, my colleagues, my panelists will react to some of these stories, looking at the banks in places like Uganda asking for a bailout from the government. If there's a general request, well, I'm not too sure where the government will find the money to bail out all the banks in Uganda. That's a different story. But I'm particularly interested in Rwanda's story with the paper which is being opened today, year 2040. It will be listed on the stock exchange in Rwanda. I think that will give a big boost to the Rwanda Stock Exchange, which is very small. I think the last listing they got was the Semawa Cement, which was sometime last year during the pandemic, listing by introduction or direct listing. And that gave a boost to that small exchange. We hope this bond, when it is also floated, will also give a boost to that East African Stock Exchange. Thank you.
Thank you very much, Bosun, for that. Let's move on now to the Western African headlines, where you've got the Central Bank of Nigeria holding its monetary policy rate at 11.5%. That meeting held yesterday. Other parameters remained unchanged as well. Moody's Investor Service raises alarm over risks of African banks' credit quality and, of course, profits. It says that banks in Nigeria, South Africa, Congo, and Angola are the most exposed to these environmental risks. Ecobank Nigeria's got a full year 2020 gross earnings stable at 841 billion naira, and the profit after tax shrunk by 66% to 33.7 billion naira. You've got Nigeria's quick delivery bags, $1.7 million pre-series A funding round. And of course, there's a story coming in from the industrial sector of Senegal as well. I begin with you, Ayodeji, with the MPC meeting of yesterday and its implications for the markets?
Okay, yeah, thanks. I think the first thing is in line with expectation, but something interesting if we look at in terms of the votes. So we have begun to see a gradual shift. Yes, the expectation is that towards the second half of the year, we're expecting that there will be at least a minimum of about between 50 to 100 basis point hike. But with the shift we're already seeing at this meeting, then it may even come earlier than expected. But I know major factor that would also inform that maybe from the next meeting would be the GDP growth rate for first quarter. So that's if we see that that strengthens, it may be a major boost for the for the committee to have more members going for the hike in the rates. Also, the CBN governor also tried to clear the air around the government around Nigeria using a floating FX management, and he further emphasized that the Nigeria is still using the managed float exchange rates structure, because they were quoting the Minister of Finance in one of our presentations on the use of the I&E window as the exchange rate. So I feel that one, the MPC members are still more for pro-growth, and they always are. They've been using other means to increase interest rates because, like the CBN governor said, they can't lose sight of inflation. Inflation at 17.33% so at February, which is high. Yes, cost push, but there's also the FX element that also impacts on food inflation if we break it down. So I think by and large we don't expect any major reaction. We've seen even after the last meeting, that's in January, it was after a week that we saw that jump in OMO. So it means that CBN is able to move the interest rate in whatever direction using other means. The MPR have just been there to signal. So even if there has been a hike, it's only going to be to signal their direction. So I believe what they've done is also provides further support to see how we sustain that momentum in terms of our growth rates.
Thanks a great deal for that, DJ. Onyeka, any contributions to the MPC meeting? How are you trading that at capital management? I know one of the key points that the CBN governor made yesterday is that they're making ample supply of FX to the banks, and for those for individuals or the members of the public that feel they're not getting enough supply, they now have the leeway to make their grievances or concerns, known. What were your takeaways basically from that meeting?
I think the first thing is, what I did just said was very right in the sense that we expected this. The only reason that the CBN would have been, the MPC might have been forced to move the needle in terms of rates, if it's different.
Like we're having an issue with his network.
The Federal Open Markets Committee meeting in the US. Can you hear me?
Okay, let's try it again.
High tempo.
You can say it again now. You can go ahead.
Oh, okay, yes. So I said I said that just reiterating what I just said about the expectations, we had expected them to, keep things constant. They were under less pressure to move the needle in terms of rates because of, the decision at the last Federal Open Markets Committee in the US, where they voted to basically keep rates at 0%. And so the risk of capital flights, even if we can still call it that at this point, was much less. And pass through of monetary policy decisions to inflation or economic growth we've seen in recent years has been very sticky, has been very slow, and so much of what much of the decisions they take at the MPC meetings is really just signaling, and we know that it's not really going to affects much of what's happening in the market. And while we know that the CBN is continuing to keep an eye on inflation and the FX market, we think that they are currently trying to tackle these problems using alternative means rather than the MPR.
Thank you very much for that. Sorry, Eka. Thanks so much for that comment. Ayodeji, let me come back to you with a couple of other headlines we have here. You've got Moody's raising alarm over the risk of African banks' credit quality, and of course, the Ecobank headline is also there. How are you making sense of that?
Okay, thanks. I think I'll start with the Ecobank's results. And if you check, like you rightly pointed out, their top line improved, and seeing their bottom line decline by 60%. So I was curious to know what's responsible for that sharp decline. And if you look at those numbers, you would see that their impairment charges on loan increased significantly, and also impairment charges on financial assets. It means they took some positions that went underwaters, and there was also a provision on monetary assets. So as majorly most of what we've seen, most of them are also non-cash, if we're going to look at it, item, but based on standard, you have to make provisions for these things. So in terms of their cash flow, I think that would have improved significantly, because by the time you look at the quantum of the non-cash that has gone in, impairment charges on loans, impairment charges on financial assets, and provisions for non-monetary assets would be close to about 50 to 60 billion. This doesn't eat into your cash, but based on standard IFRS 9, you need to make those provisions and in line with CBN requirements. So I believe that they will just need to watch, and if the yield environment moves in their favor, they can also quickly come back and write back those provisions. But I think for most of the investors to be very disappointed, because I'm not sure they were able to declare any dividend. And I feel that because these are non-cash, they should even have the cash to at least declare dividend, except maybe they are breaching the normal rules that if your PAT is above a certain level, you can't declare dividend. But beyond, coming back to the news on the Moody's rating on for African banks, I feel that the alarm also is in place, especially for a lot of the African countries who've been accumulating significant debt. But when you check in terms of our productivity, it's still really low, and we get ourselves carried away by looking at our debt to our GDP. But how productive is the GDP? It's only countries that have very productive GDP in terms of productivity that can generate income. So while you look at it as a company, you have assets. If those assets are not generating, you can't be borrowing against just asset non-yielding assets. Okay. So if our GDP is not producing, and we look at it based on what's our revenue, so I think there's a cause for alarm. But because we are sovereign, we have the ability, most of the borrowings are also in the currency of those countries.
Yes.
They are not exposed to foreign loans or dollar denominated loans, which they don't have control over. So I believe there's really no major cause for alarm. They will still continue to meet their obligations, but investors will just be wary of if they are trying to raise international funds.
Thank you very much for that, Ayodeji. But also, let me come to you with this Moody's headlines as well, if you would like to have a go with it.
I think the Moody's story is pretty clear. Everyone needs to take it on board. There are a lot of pressures, as you can see, from banks across the continent. Ugandan banks are asking for a bailout. Countries where the banks are exposed to commodity will have to think a little bit differently, like South Africa, Nigeria. The banks in Kenya were more exposed to industries and services sector because Kenya is not an unproducing country, as it were. So they're exposed to industries, manufacturing, tourism, hotel, leisure. That was the big problem for them, as well as for Morocco. But coming back very quickly to some of the stories that are just breaking today, and I think we need to take them on board, is the Dangote cement story that came overnight. Onyeka Ijeoma is in charge of industrial goods at Vetiva Capital. So he sees the numbers, and I was just checking a few seconds ago. I saw Lafarge Africa also reporting this morning. So Dangote Cement reporting about almost 100 billion naira in tax for last year. I think that was huge. I think it's about 97. The headline figure in about 1 trillion naira. That was quite huge. Dividend is about 16 naira, a few kobo plus. Lafarge Africa is reporting 1 naira cash dividend. They say that free net cash flow was about 3.6 billion for 2020. The cement companies are making. We actually had a very big show last year. EBITDA that Lafarge is reporting is about 30%. So I guess it's a whole lot of cementing story that we got this morning. But I think I'll throw that to Onyeka. I'll let him have a go at it. Let him cement what I've said so far.
So Onyeka, you've got the floor.
So yeah, Dangote Cement released their results yesterday, like Boston said. Largely impressive results, but also just to note that this was bang on in line with expectations. Top line finally crossed the 1 trillion naira mark, which is very impressive. They joined the 1 trillion club, and this was up about 16%. But like I said, pretty much in line with expectations. We had seen a strong resurgence in cement sales and cement in the third and fourth quarter, and even towards the end of the second quarter after the easing of the lockdown restrictions. And this was very sharp compared to the rest of the economy, and we saw that support top line across all the major producers in Nigeria. According to the Minister of Finance, last year we disbursed around 1.8 trillion naira for capex, which is one of the largest that we've ever done, both in terms of naira and USD. So that's very, very significant. And then we saw them continue to keep their costs low, largely in line with what we expected. EBITDA came in at just under 500 billion, again in line with expectations, and then PAT was up by 40% year on year to about 276 billion, just shy of expectations, but that was likely because of the higher tax bill that Boasim talked about. So this is actually a very positive result for Dangote Cement. On the other hand, they continue this, should I say, unsustainable trend of giving out dividends higher than their earnings per share, of declaring dividends higher than their earnings per share. Pretty soon, the shareholders would start asking questions about this. It's largely unsustainable and goes against a lot of corporate governance guidelines. So that's one question that they'll need to answer for. I haven't had a chance to look at the WAPCO headlines, the Lafarge numbers yet, as I saw that they released a few minutes before this call. But maybe at the next call.
By the time you would have been able to digest it. But I mean, the good news is that they're declaring a dividend of 1 naira. I mean, that's the music to the ears of investors or shareholders. Moving on now to the Southern African headlines we've got before us. South Africa's bar sales was down 77.1% to 3.8 million rands in January 2021. You've got the Steinhoff insurance to agreeing now to pay some 78.1 million euros to settle claims from 2017. One key headline here as well, apart from Malawi's inflation and old mutuals paying them some dividend, is that of Airtel, which signs a tower sale deal with Helios Towers. That's for the Madagascar towers and, of course, Malawi towers. Boston, let me come to you quickly with these headlines and, of course, get the thoughts of Monyeka Ijoma again regarding Airtel, how this deal will affect their share price.
You see, thank you. You see, the bar sales for Southern Africa is one story. You understand what happened to alcohol. Alcohol was one of the most affected industries in South Africa with the lockdown. Outside the tourism, the hospitality, and what have you. And the government just hit everybody significantly in terms of no alcohol consumption, no alcohol sales, no alcohol consumption. You can't even move the carton of alcohol or beer from one street to the next or from one town to the other. So it was a total lockdown for alcohol, as it were. There were a little bit of movements for folks and all of that where you can get a few occupants in some hotels, but alcohol was a no-no. So when folks couldn't go to the bars and what have you, you found a nearly 80% decline in bar sales, 3.8 million rand. That was really in the water. If you look at a year ago, which was in January of 2020, you're talking about triple digits in terms of it. So this was a whole situation out of the COVID-19 pandemic, the whole level 1, 2, 3, 4 that South Africa implemented. Again, Old Mutual is paying dividend despite 5.76 billion loss. This is a big company, by the way, financial services group, tax, bank, whatever, financial services, supermarket. So they can afford to move things around, tell investors, well, thank you very much for last year. It was a bad year, but here we're keeping faith. We're paying some form of dividend. And I think that was good. The problem with Steinhoff is not over yet. I think the ghosts of the problems hasn't really operated. So the books are still being unpacked. There's still a whole lot of issues to settle. So 3-4 years down the line, once you get into these problems, you can hardly get out.
Thanks a great deal for that. So I'll come to you with the Airtel story.
Yeah, so on the Airtel story, this is likely a continuation of what we've been seeing, the trend we've been seeing in the telecommunication space over the past 10 years on the continent. The telco service providers have basically, understood that, owning and controlling and managing, these tower assets is not very efficient. It's not a very efficient way to operate. And so we've been seeing the sale and lease back options, spring up over the past 10 years. In Nigeria, for example, almost no tower or fiber optic cable assets is owned by the telcos. They've either been sold to the IHS towers, American towers, Helios towers, or main one cable in some instances, and we're going to continue to see it. It is actually a more efficient thing. I expect that it will be positive for Airtel.
Thanks a great deal for that, Onyeka. Northern African markets, you have Libya allocates 7 billion dinars, that's equivalent of $1.6 billion to the national oil company in 2021 budget. And of course, Egypt is to commence new EgyptAir-AirGhana operations in a few months' time. EGX chairman calls for more retail companies listing on the bourse, which is the stock exchange. Of course, that's a message that resonates across the continent. Morocco's got the microdata netting 8.9% rise in its 2020 income, and of course, Tunisian Solidarity Bank plans to transform into a universal bank. Ayodeji, help us to make sense of this Libya story. 7 billion dinars, $1.6 billion for the national oil company. What will that be? What will that change in the crude oil space?
No, I think if I'm able to make a sense from this story, it's like most countries are trying to see how they can also join that, join the market in terms of creating export proceeds for themselves. Yes, we know most economics are moving towards what I would call the usage of more EVs, that's electric vehicles, but we know that it's still going to take a while. There's still a lot of, when you look at it in reality, developing countries, fossil fuel will still be used. And even the likes of China, India, to drive your economy for industrialized nations, you need the renewable is still upcoming and cannot sustain an industrialized economy. So even for Nigeria, we will still need oil to industrialize. We'll still need to be able to power those machines with oil, and that's what you see for most developing economies, or say for the developed economy. They know you will still need to attain. There will still be need for fossil fuels to drive industrialization. So I think it's that investment also is in line. It's just that if we continue to see more supply, more discovery of oil, then we'll begin to see that for Nigeria, the impact on crude oil prices or across the world would not be positive for us. And now that even production is still really very low based on OPEC plus quota.
Thank you very much, Ayodeji Ebobosin. EgyptAir-Ghana Air.
Of course, I can't miss that story, because again, I just love it when countries in Africa give themselves a whole lot of embrace or handshake. So I love it, all the way from Egypt, from the land of the pharaohs down to Nigeria's backyard in Accra. Something is going on. You're not in the game. You're not in the game. I said it yesterday on the show that I want to see Nigeria moving fast and furious, signing deals that make sense to the economy and that shows that there will be investment inflows, or at least some level of exchange. And this is it. With Egypt Air looking to West Africa, what is happening? They are drawing the map of the AFCFTA already. You are not part of it. Excuse me, you are not going to be part of it. And I think other panelists will agree with me that Nigeria needs to move very quickly. Everybody's crossing the T's and dotting the I's, whether by land, by air, by sea. Everybody's crisscrossing and looking at what they can do. So EgyptAir and AirGhana opening the route behind Nigeria. Excuse me, something is going on. I don't know if the men on our watchtower knows what is going on right now, or they are paying attention. In Nigeria it is, but they need to pay attention.
Thank you very much, Bosin. That is a beautiful marriage between EgyptAir and Ghana Air. And we look forward to the reception, I guess. I bet you can tell. Well, Bosin Omovaye, Executive Editor at the Frontier Africa Reports, thanks a great deal for your analysis. Ayodeji Ebo, I appreciate your insight. Onyeka Ijoma from Vertical Capital Management, thanks a great deal for your analysis on the show as well. This has been Frontier Opening Bell for today. I'm Temple Ashaju. Thank you for watching. See you next time. Bye for now.